Welcome to another edition of Step by Step Talks. Today I have the honor of having Rhona Konnelly with me live in person, all the way from Nanaimo to Victoria. Welcome, Rhona.
So great to see you, and how wonderful we get to meet for the first time.
Finally, we've been doing all our sessions online. Yeah. And today we have a very important topic, a continuation of our 4-part series, which we are going to touch on regarding servicing policy. So it's not just that your policy, you've bought an insurance policy and that's the end of it, right, Rhona? There's much more to buying a policy and what happens after. So, Rhona, tell me, what are you thinking? You have come up with, we've talked in the past about orphans, we've talked about, and we will go ahead and also talk a little bit more about orphans, because a lot of people don't know what orphans are and why it's necessary for us to continue looking into our policies every few years. So, Rhona, what are your thoughts on that?
I have a lot of thoughts. When we think about the beginning of the series, where we were talking about why an annual insurance review matters, and then we went on to why it's important for advisors today to be trained in understanding why these reviews need to continue for the lifetime of the policy. And today, here we are. Purchasing an insurance policy represents a promise. And once that advisor sets that policy in motion, because they no longer stay in the industry, or if they move to a different profession, or the insurance company itself doesn't have anyone servicing it, what happens to that promise to pay? The promise to pay is still there, but the promise to serve is a lifetime commitment. So orphans are people who don't have anyone looking after them. They have bought a policy and probably think there's nothing more they have to do from there, that somebody will let them know if there's an option to take advantage of, if there's a specific date that they have to know. You have to request information, or maybe they want to change a beneficiary, or their insurance is no longer fulfilling their current needs. Servicing doesn't just stop when a policy is purchased.
No, definitely not. And I know that, many times when I was in the industry, working in the field, that you would call and ask for an appointment to the client, can I service your policy? And they'd say, what does that even mean? What does the service of a policy mean? And it was an opportunity for the advisor to go in and see if there were any family changes that need to be changed. Maybe policies increased, maybe policies cancelled, maybe new policies bought. I know, and I remember of a case where somebody sued their agent because they were not sold enough insurance. And that all goes into service, doesn't it?
It does.
Yeah.
It does.
So now, when it comes to servicing policies, and you talk about orphans as well, what happens to orphans? Why is an orphan created? What is the reason for an orphan?
Oh, goodness, I can go back. You've been in the industry a long time, and
That's
so
right.
have I,
Yeah.
approaching 5 decades.
That's right.
And at the end of the day, when I think back on starting in the business, we were trained to tell clients that part of the premium that they pay for is servicing of their policy and making sure that their needs are monitored on an ongoing basis, and to bring them up to speed on any changes, or when they get an anniversary statement, that they understand what it means. Orphans were created by the industry.
Yeah.
And when I think about today, we hand delivered a policy. I don't think there's anything wrong with arranging even to do a Zoom with a client to deliver a policy. But the reason we have that gap is that probably the early 80s, mid 80s in Canada, the industry changed and it became a world of brokers. So there were many different individuals selling insurance and maybe not doing the holistic path that we took as advisors. So things tended to break down. Then at that very time in the early 90s, what did you have? You had mergers, you had acquisitions, you had the quest for insurance companies to be the biggest and the boldest. So they would purchase, there's one insurance company in Canada that purchased 15 life insurance companies. Yeah. So what do you think happened to all those policies that insurance company themselves didn't even sell anymore? It went into what you refer to as a vault. And I call it a vault because even if it wasn't in a physical vault, it was put aside in favor of new sales.
Definitely.
So that's how orphans have continued to grow. And even today, e-delivery, since COVID, e-delivery has taken over. And we used to sit and discuss with the client, are there any changes to your health since you bought the policy? Do we need to do an update on the coverage? Has anything changed? Because sometimes it would take 90 days or longer to underwrite a policy. They're not delivering them and going over the clauses and the dates and the riders and if it was rated, when the rating could come off. The client is missing out on valuable options, which ultimately could lead to the policy lapsing, because that's not their industry. They don't understand. They're only saying to themselves, oh, this is going to be there when I need it.
Now, most of these policies, they have cash values. They have, good dividend returns, because some of these old plans were just fantastic, right? If a person, let's say a grandmother, passes on, and we talked about this earlier, what happens? I mean, if the family doesn't know there's a plan in place, or if they try and call the company and nobody picks up the phone, and that happens a lot now because there's nobody on the other end anymore. Mm-hmm. It's more of a digital kind of an era where you're pressing buttons and being kept on hold. Yeah. Or it may take, like you said earlier on, 15 days before somebody actually gets in touch with you, or maybe not. Yeah. What happens to these plans? Like, you've done your research, and you had said earlier on there's 40 million plans that are...
40% of policyholders in Canada are deemed to be orphaned.
So 40% of plans in Canada are deemed
the last statistics we could get a hold of.
Yeah, that is unbelievable.
And as people get older, I find that the financial industry itself focuses on investments, focuses on when you take your RRSPs into income, focuses on tax-free savings accounts. We have a whole different financial system where protection and insurance reviews are at the bottom, if they even exist at all. Now, we do have an ombudsman in Canada.
We do. Yeah.
But the problem with that is if you have a parent who's died and nobody knows, well, gee, I found this documentation, but Confederation life doesn't exist anymore, and I'm sure my parent had a policy. What do I do? You're absolutely right. That's why my mission is to create Insure Justice. We need a central place for policyholders from the past into the future to always know that there is a resource that's there for them to find help with their policy.
So if there's a paid up policy sitting in the vault, and when I say paid up policy for the sake of our audience, means that it doesn't require any more premium, but it's a policy that's actually existing that can be claimed. How long is the life of a paid up policy? Like, how long does it stay in the vault?
Well, the thing is until there's a react mode coming from a client or a beneficiary or a power of attorney, it sits there.
And then what?
There are probably lots of unclaimed policies.
Yes, and that's what I mean. Like you said, 40% are orphans.
And it's interesting. I had a conversation with the Insurance Council president for British Columbia, and she was amazed at my giving her the information of how big this problem really is. She was not aware that there were all of these policies that had been acquired. It's unless you've been in the industry a long time, it tends to get shoved under the rug. It tends to, we don't want to think about that. We have to satisfy our shareholders. When insurance companies in Canada demutualized, what did that mean? It meant that when you earned a dividend off your policy, you were deemed a shareholder of the company. You technically are. But when you demutualized, profits were shifted to shareholders away from 100% policyholders in a mutual company. So we have lots of history. We have lots of history, and consumers need to be made aware. That's what's so great about this podcast that you host, Rohini, is you're bringing awareness to the consumer. I feel that we can bring this to advisors, but advisors say, well, I could call this person, but there's no new money in it for me.
No, definitely.
We need to shift this attitude, and this attitude should be, we have a family member, part of the family tree. This is a promise to pay that's coupled with a promise to serve until that obligation from the insurance company is met. And people forget. I mean, goodness, can you think of buying a policy? I work with an advisor who has a book of business that he inherited, and his oldest client bought a policy in 1954, and he's still alive.
And he's still alive, 1954.
And he's been paying $7.45 out of his bank account ever since.
Can you imagine?
And has never had a call from anybody.
And because it's $7.
So do you remember what was going on in your life at that time for a $7,500 policy?
Absolutely.
Back in 1954 was probably quite a lot of money.
Yeah.
So things change and people's lives change, and we have an obligation to uphold.
So for the benefit of our audience, this is our third session that we are having. Let's break it down step by step. Step by step talks
there we go.
endorses you 100%, and we will continue to do that so that you can champion your way through, letting this word out about the orphan policies, because we see it as a necessity. It is very important, and I think the consumer is not aware. So let's go step by step in talking about number one, what we should do. What the client, after they have been sold a policy, what should the advisor tell the client? Or they may probably tell them and they forget.
Correct.
So how is there a way, what's the possibility of us letting the client know this is what you need to do? Before, there used to be a form we used to sign, I believe, and I'm not sure if that's there, that, we'll come back and we'll service and we used to give an obligation, like we'll be back to see.
We did everything by hand.
That's right. But now what can we do to, everything is, like you said, e-delivery, which I personally don't like, because I used to go and talk to my clients and give them a gift, and, not for any other reason other than the fact that, you've bought a policy for your child, here's a piggy bank, start a savings plan.
Exactly. Well, you know what? Step one, what can we do? We can help consumers be aware that this is an issue. And that first and foremost, whenever they purchase insurance, and we're talking not about people who buy it online or through guaranteed issue insurance that is offered on the television. Nothing wrong with that for some people who don't qualify for the traditional route, but we have to take into consideration there are different distribution channels for that. But for an individual who's dealing with an advisor who holds themselves out as a financial advisor, giving advice and being held accountable for that advice, we want to encourage consumers to ask this question. What is going to happen from this point in time in terms of the servicing of this policy? What can I expect?
Right.
We need to empower consumers to be able to feel confident to ask that question, just like they would expect service when they purchase an investment.
Okay.
In terms of monitoring the investment. That's step one.
Okay. And what is step two?
Step two is we need to bring awareness to advisors coming into the industry or those that are there now to take another step up in credibility and change their practices. We are living in a digital world. I mean, at the end of the day, I can think of all the clients I managed, and it was all on paper. I think I had the Granum system to manage my leads and who I contacted. But when it came to today, there are customer relationship management systems that an advisor can set up today. They can input the data of all of their in-force policies that they are responsible for servicing and get help. Get help to figure out how to develop a contact system by first understanding what that client has. Now, there's some administrative toll to that, but that administrative toll will pay dividends in terms of that client's perception of the advice that they're getting, the service they can expect. They will tell others. It will heighten referability. It will enhance the reputation of the industry. Those two things we need to have changed.
All right. So once we get that in place, how do we get the consumer to know it's important when someone calls them for a service call, that it is important to see somebody or to keep in touch with their advisor, because that's also a problem.
It's hard for people who haven't been called in 25 years.
That's true too.
And you know what's interesting, I was presenting at a conference last year in Toronto, and one of the things I left the audience with, I said, can you think of, normally in the investment world, advisors think of their investments under management, and I say, think of them as assets under care. They're going to pass on to someone eventually. Have you taken a look at your insurance assets under care? How much of an obligation you have right now today of a benefit to pay a family member or to pay that individual if it's a living benefits policy?
Yeah.
Then take a look at what do you need to do. Think of it this way. Why not call somebody and say, I bet you were wondering when somebody was going to call you. I just want to let you know we care to make sure that you know what your policy is, that there's anything in it that needs to be discussed. We want to make sure that you understand it, you're clear, everything's okay, and this isn't a call to sell you another policy. This is a courtesy call because we care that you purchased this policy and are expecting it to pay in the future, and this is something we have adopted as a practice.
Now, Before we go any further, the audience would love to hear a story about how you have helped somebody find the policy, and you've got quite a few of them, I believe, right? That you actually went to somebody with an orphan, or somebody contacted you with an orphan policy, and you managed to get them a claim settled.
Well, I can tell you that I've done a lot of those.
Yes.
And a lot of them were living claims. They weren't where I have been able to help families find policies of a deceased. I'll think of that. Let's start with that story. Here was an advisor that I was supporting whose client passed away a couple of years prior to him calling me, and his wife survived him.
Right.
And she was going through some old papers. This is 2 years after him passing away, and she found this old document from 1990.
Wow.
And it had her husband's name on it, and the document was this transfer of ownership of a policy on their ex-son-in-law, his life, ownership transferred to her husband who was deceased. And the insured was the ex-son-in-law, and the beneficiary was their grandson.
Oh.
So the advisor calls me and said, can you help me find out if this policy is in force?
Right.
So I went through my channels as a specialist, and I found out that it was in force, and it was under the name of an advisor who had never called that client since.
And had the ex-son-in-law passed or no?
No, it was the husband who was the owner.
Or the owner had passed. Yeah. Okay.
So I helped that advisor to get the transfer of servicing to him so that they could take a look at reviewing that policy for his wife in favor of their grandson.
Yeah. Can you
who was 20 years older.
Yeah. That's amazing.
I've helped to find to get money for clients who were disabled under the disability waiver of premium rider.
Yeah.
Their advisor recommended they cancel the rider, and I said, oh my goodness, how long have you been disabled? 2.5 years. We are going to get you your money back, and we did.
See, the thing is, agents go in or advisors go in and put all these riders into place, because the old system, now to be honest, was every rider you put in, your commission went up by, I'm sorry to say this, by a certain percentage, right? So the old plans all have a lot of riders. The new plans are less. There are lots of riders not even available on certain plans.
Correct.
Now, right?
Correct.
So all these riders are not available, but before they were, and you would get a commission. So that was the purpose of selling them. Not that the consumer understood what the rider was there for.
Didn't understand.
Yeah.
Most consumers understand what they think they heard their advisor say.
Exactly.
So they have a misconception.
Yeah.
And another comment to make on what you mentioned earlier, that maybe some of these policies, the premiums are paid up, because back in the day, you could buy a policy that was paid up at age 65 because guess what? The normal retirement age in Canada was 65, which is no longer the case.
Yeah.
Excuse me. But there are still people that have very complex contracts that nobody has followed up with them on, that are in danger of lapsing because it's based on an investment rate of return.
That would be the old universal life policies.
Excuse me. Exactly. That is posing a significant problem today.
Yeah. So to my audience, if you're listening, universal life policy should be reviewed actually annually.
Annually.
Yeah, because I mean I have one as well from many years ago, and I had to get back into it, believing that I would have enough premium being paid to keep the policy first, but no, that's not true. I've had to increase what I'm paying.
Yes.
And it increases gradually or it lapses, right? So the old plans that came out, because UL was the big thing at that time, after the whole life plans, they're not that great actually. You've got to look into them.
Well, they're the most high maintenance insurance policy you can buy.
And
there's where the responsibility to serve is on the onus of the advisor.
Yeah, and many
clients are not investment savvy. They're not insurance savvy.
Yeah, not many advisors understand those policies, because there's a lot in there.
Yeah.
So they tend to just, you can cancel this plan, but if you've put in $10,000 into a policy, you don't necessarily need to cancel it. You need to get an agent to service it. Or the orphans without any agents need to be contacted to let them know that they need to look into their plans so that they don't lapse.
My sister and her husband bought a policy 25 years ago when they started their business.
Right.
And it was not in their corporation.
Oh no.
And it's now going to lapse because the cost of insurance built into the plan went up every year. So they put a lump sum in thinking it would be paid up in 20 years. Now it's going to lapse, or they're going to have to pay, instead of paying like $1,500 a year, they're going to have to put in like $7,500 a year, and it's still going to go up in price every year. That is wrong, Rhona.
I totally
that
agree
should
with you.
not be happening.
A lot of advisors were also looking into leveraging at that time. And I just don't like leveraging. But there was a new concept of leverage your plans, go to the bank, pay this, and at the end you'll get this much. There's no guarantees on dividends. There's no guarantees on the interest rates that your plans are giving you, right? So these need to be reviewed. So if it's an orphan plan because your advisor left the business and you have it in a corporation and you're thinking, oh no, it'll be fine, I'll still have a plan, if I was to die, my wife will get a lot. I have clients who did have leverage plans, and when something eventually did happen, there was nothing in the policy.
By the other side of the token, they thought they were going to have all this money that they could then take to the bank with their policy.
Yeah.
And I had a gentleman who was the father of a client of an advisor whose policy had no money left in it.
Yeah.
And he said, well, this was going to be part of the contributions to help me in my retirement.
And it was
gone.
It was gone.
So that is an injustice in a way that of the biggest caliber, because it's kind of like a silence that the industry has on this whole issue. There is a silence that this is even happening. They're not talking about it. I feel like I'm the only one talking about it.
I think
until I met you.
I think we're getting the work out.
We're getting the word out a bit at a time.
That's right. And we have our sponsors, Intergen,
Yes.
Thomas Gamer and Zach Kennedy, who are supporting us very much on our quest to get this orphan policy message out there.
Yeah.
So it's not only you. We've got some good people supporting us as well, and we'll continue to spread the word. Now, what would be a good message? I know we've talked about the audience going and looking at their plans, but what do you think is the strongest message you can pass out to the audience today? What is your strongest message that you want out there so that they can, understand the necessity? I know we've shared stories, but, why do you think that the audience should contact immediately? And I don't want to put you on the spot, but I think you have an answer.
It's a really good question. Why it's important now?
Yeah.
Because this is a growing problem. This is not something that all of a sudden is going to have an end date. Every day right now, as you and I are sitting here, there are people purchasing insurance.
Yeah.
And it's either part of a financial plan or to protect a financial plan.
Right.
And preparing for the unexpected is our duty in the insurance industry. So for those listening, I encourage you, and we've suggested this before, take out your insurance policy, gather all of your documents, and request from your advisor or seek out help by contacting you through your show to get help so that you understand what you own, what you're paying for, and where the gaps are so that you can have the right coverage. And once that accountability starts to grow, we will have a shift where we will have consumers actively participating in what they're purchasing instead of saying, I don't know what I have.
Yeah, exactly.
I don't know,
Yeah.
but we want you to know what you have.
Yeah.
So we're working together.
So, as Rhona said, if you have any questions, you can contact me directly at Step by Step Talks, Rohini Kapoor. And if you message me privately and confidentially, I can direct you to the right people. I might just put you back to Rhona again, and she can help you answer your questions, look for your policies, look for your plans. But moving ahead, Rhona, what is your next, where are you speaking next now? You've talked in many conferences. Do you want to list a few of the conferences that you've spoken about orphans?
Yes. The Elder Planning Counselor certification I'm part of the faculty there where it is a component of that program to understand your insurance, especially as you get older, and what benefits you can access. There is a Pro Seminars program that has a variety of conferences. I'm speaking in Niagara Falls in June, and it will be on the advisor of the future and why servicing of in-force insurance matters more than anything right now. And so I really go with where the flow is attracting me to be based on my messaging, and have a number of podcasts that I do, and have Konnelly Consulting YouTube channel where it's all focused on the consumer, not on the advisors in the industry, but talking about what types of insurance are out there. What does an insurance review, what should it look like? What kind of service should you expect from your advisor, so that we're getting the message out in a variety of different ways.
Another point I want to bring out, Rhona, and that's fantastic. I'm hoping that this continues your message, your quest to get this message out to everybody. But another point is, what message you have to the insurance companies? Because when you and I started, we got training. Like I'm sure we were training like 6 months of the year.
It was intense.
We were flying in and out of Ottawa, London, Toronto. Always there was great speakers.
Yes.
The grandfathers, of this industry.
Oh yes.
Who the forefathers who taught
forefathers.
us, forefathers, not the grandfathers, but the forefathers who taught us so much about this industry, who were real. I mean, they were phenomenal people, and they started working with. I remember Zig Ziglar. I remember all these guys who started with
People who have to
stories.
be in the industry a long time to know who that is.
Yeah, well then
Advisors today don't have a
know who
clue.
Zig Ziglar is, But I remember going on a conference, seeing him, and so these are the kind of people who taught us how to to sell properly and to service our clients, because they went and picked up premium, every month from their clients.
And they knew the families because they
The
were there
inside
every
out.
month.
Yeah. So what would you like to tell the insurance companies?
That's a great question.
What are we lacking here that's caused this to happen?
My message to the insurance industry is, think of your histories. Think of all of the histories. When you think about our stories, the legacies that our families want to leave for the next generation, what do you want to leave for the next generation? Think of the insurance industry in Canada is older than Canada itself.
Yeah.
I would like to encourage the insurance industry to take accountability for finding a solution to this issue. We can get together and we can find ways to collaborate. There's been discussion forever. We can start by having a mandate for an ongoing service model that you encourage or adopt in the industry to the advisors who sell you products.
Right.
I think we need a big powwow.
Yeah.
And I think that it needs to have people that are willing to implement that change, that want to make that change happen, that are prepared. Even to use AI today is a great source for getting all of these orphan policyholder datas together. Do you know that there are histories in those policies that are being lost right now today?
Definitely.
So that's my accountability to the industry. This is not to point the finger of blame at the industry. It's to say whatever decisions were made to lead us to this place, there is a solution.
So just one question regarding that. Do you think it's because now ownership of policies has become part of an MGA or an AGA, because they're now owned by certain individuals?
We have a different landscape now, and for your audience that don't understand what that might mean, it means that even though you buy a policy from XYZ insurance company, the agent or the broker or the advisor who sold it to you may have a license with that company. They have to be licensed.
They have to be licensed.
And a robot can't do that. You need to have a license.
Exactly.
But it means that if that broker leaves, you're at the mercy of where they are represented.
Yeah.
The days are gone where you just work for an insurance company as an advisor.
Right.
You have to go through a managing general agency, a different type of structure. And today we also have another movement. We have insurance companies creating little brokerage systems because they don't want, unfortunately, to service these policies. So it's being tossed over to them. And the industry can't do that.
No,
because advisors don't know how to service it.
Yeah.
They say, well, why am I investing my time and I'm not getting compensated? There is such a breakdown. And it's about facing what the landscape is and saying, okay, what are we going to tackle first? Well, why don't we have a loyalty? Why don't we have some type of a communication plan set in place where they say, we're going to be first. We're going to be the first in to reach out to our orphan policyholders and tell them they matter to us, and that if they need help with retirement planning, long-term care insurance, if they need help with legacy planning, intergenerational wealth transfer, or charitable giving, we are going to take the stand and do it now. Can you imagine what that would do for their reputation?
Yeah, there's definitely something has to be done, because when you say 40% of plans in Canada are orphans,
That we know of.
Oh wow, that we know of. That's even
big.
worse. Yeah, and one of the reason is the insurance industry is not easy. I mean, I trained for many years, and I trained a lot of advisors in my career. Made them successful, but many did not make it. Because it is hard work and you have to put food on the table. So if you cannot do that in the first 6 months, advisors come in and then they leave. You get all the family insured, and they're there without an advisor. So what do you do, right?
So the training, and I know you believe passionately in this, the training has to change.
Yeah, training has to change. Training has to be given.
In fact, the training doesn't have to really be reinvented. We already know what works.
And it's, like I always say, insurance is more for, it's like a people's product. It's not like, you sell it on the computer, you close your computer and it's done. Because for me, when I sold a plan, that family became my family. So I wanted to make sure that nothing happened to them that would hurt them, because that's the reason why we're selling insurance. Whether it's critical, disability, life, whatever it is that you were selling, it was that you're taking care of them. So it's your family.
It is. And the most humbling part was when I delivered death claim checks to a family.
Yeah.
You really know the power of the product. Yeah. The family is never going to say, oh, we don't want that money. But they're worried about what's going to happen to their family if there is a need for money. And it's always a windfall that I'm very proud to call myself an insurance professional, because I really think it is a lifetime commitment that needs to be made to these policyholders, one way or another, until that promise to fulfill what they've paid for is done. It is not to be put in a vault.
No.
And then let's just see what happens.
Let's see what happens, exactly. Like I said, what is happening to those paid up plans? Nobody knows that haven't been claimed. They just sit there, then what? How many years do they sit there for?
I don't, and it's interesting. There is, as far as I know, there is no moratorium. There is no end point in time. If you can satisfy the claim requirements, the completion of the claim form, probably there'd be a copy of the will required. There might be, who knows?
Can a grandchild, great-grandchild, can they come and claim it? I wonder what happens, because I don't know.
Yeah. Well, what happens is the family just has to make the inquiry. And as long as the premiums were paid to date, on the date of the deceased passing away, there is someone in the family that can claim.
Yeah, because beneficiary may have passed as well.
Well, so the beneficiary may have passed, and maybe a grandchild finds some documentation, and then if there's no contingent beneficiary, it would go into the estate.
That's right. And then, yeah exactly. Now, just moving on to another step as we finalize and as we finish our great episode. What do you think about step-by-step endorses women coming into the insurance business? What do you, as Konnelly Consulting, have? What are your views on women joining the industry? Because in Canada, it's known that women are not joining the industry for various reasons. What are your views on it? Because you've been doing this for 50 odd years. Right?
I really feel that women are a natural in this industry. I've always felt that. We have an element of how we conduct our conversations. We have a right brain approach where we're talking about feelings, we're talking about what's important to a client. We're not coming in with an illustration and trying to show all these numbers. So I'm hosting, and you are part of it.
Oh yes,
the Women in Insurance, the first Canadian Women in Insurance Excellence Symposium.
Oh, that is excellent.
And it's online.
Yeah.
We will have, you're one of our panelists. I not only want to attract those who are also doing well in insurance, because we are definitely in the minority, but as a way to encourage women to consider it as a distinctly honorable profession.
I would agree with you, and I would, encourage women to join the industry. And you know what? Why don't you just join the industry and ask your manager, give me all the orphans. Let me look after the orphans, because nobody wants them.
That's it.
So
they have an automatic job.
You'd have an automatic family, a huge family that you can look after, and also at the same time create new business slowly, step by step.
And ask who in your community knows of an advisor, financial advisor, who's retiring.
Exactly.
Because there is an opportunity for you to come in and help them with the insurance side of the business.
Yeah, that's another story for another day.
Another day.
People do not retire because the industry sort of has made it easy for people to stay in the business.
Definitely,
right?
definitely.
So as we wrap up, is there anything else you'd like to share with us, Rhona?
I just am so thrilled to be able to have put together a thought process around having a series on this topic, and I'm so grateful for you and for all the work you're doing. And I think it's important for us to stick together. I think it's important for us to help other people understand. I take it totally from the perspective of this is an opportunity just waiting to blossom.
Well,
and it has to go through its motions. It's like anything that's worth having. Sometimes the road is a little bumpy, and I never get discouraged. In fact, I look upon that as, oh, somebody's interested in that, or they wouldn't have made the comment they made, or they're yes, I have the support. I want the consumers to be asking questions. That's when we know. So that's my mission right now.
Well, that's fantastic. Step by Step fully endorses you. And, we will continue doing podcasts and continue spreading the word, hopefully. And, in the next few months, do it again. And I'm looking forward to your symposium. I think it's going to be fantastic. So as we wind up, I'd like to thank you for watching us. And thanks you, Rhona, for coming all the way from Nanaimo to Victoria.
Parksville.
Oh, Parksville, even further.
Further up on.
Yeah. So thank you so much for coming in. Step by Step would like to remind you that if you like this podcast, please hit share, subscribe, and like. And if you need any more information, you can get in touch with Rhona through Konnelly Consulting.
KonnellyConsulting.ca.
That's right. And through Step by Step Talks through Hini Kapoor. I wish you a great day, and we look forward to seeing you in our next podcast. Have a super day. Thanks, Rhona.
Rohini.
Yeah.